Hi, gold traders. Prior to the FOMC events last Wednesday, we uploaded a YouTube video with our heads up for the day. In that video, we forecast how the market might play out under three possible scenarios with regard to a rate hold or rate cut, and highlighted two key levels on our chart that represented the most likely target scenario. We were only ever really going to see either a 25 basis point or a 50 basis point cut. We had a question from one of our viewers who asked if our comment in the video stating that the market would be disappointed with a 25 basis point cut would mean gold going down in that scenario. In a word, yes. In the end, however, we saw a 50 basis point cut that ejected price to go on and hit our target at 2600 before a correction. As forecast, we stated that price would see a correction at 2600 after a manipulation play around that level. Hopefully, those of you watching this video will have seen our previous videos, including the one in which we explain how our manipulation breach levels work, and noted that, because there was no candle body close above 2,600, with price getting pushed back with a rejection wick right on that level, price turned from there to flow into a strong continuous trend in the opposite direction. We also highlighted the whipsaw action that would ensue around 3 of the 4 FOMC events. To give viewers a little peek into how we forecast the market behavior on pivotal FOMC Wednesday, let's begin with Thursday, the 12th of September, when we saw a breakout that created multiple all-time highs in a record-breaking short period of time. A number of gold analysts were of the opinion that the breakout on that Thursday was the gold market pricing in a 25 basis point cut, but we stated in our video that we disagreed with that view and thought that it was the market pricing in a 50 basis point cut. That was no idle opinion on our part based on mere speculation, because getting the figure wrong would have meant an incorrect forecast in relation to our predicted key levels and reaction to either a 25 basis point cut or a 50 basis point cut. We painstakingly analyzed past rate cuts in the context of any pricing in moves beforehand by the gold market, along with analyzing recent stock rallies in the equity markets, before arriving at the 50 basis point pricing and figure. We also took a detailed look at the footprint charts for additional information. Now, it's important to note that identifying key levels above an all-time high is somewhat more difficult than identifying key levels below. So how do we decide on the 2,600 level as the resistance to the boost off the knee jerk on a 50 basis point rate cut announcement that would then push price back into a correction? Let's go back to Monday the 16th of September, when price reached uptrend exhaustion at the 2,589 level after the early pricing, in move that began the previous Thursday. In order for the smart money to have another bite at the cherry off the FOMC fireworks, they needed to take some profit off the table and manipulate price down with some force. Now, we don't have the time in this video to explain why, but that manipulation play was not as successful as the manipulators would have liked, and that left extra room to make up for in the event of a boost off a 50 basis point cut. We know full well how risk managers work, and they are very predictable. That is one of the qualities that gets them hired, and one of the reasons why they never get asked to organize the office Christmas parties. Risk managers would have been very careful and measured with regard to how much extra in dollar terms, above 2,590, they would have allowed their firm's long positions to have gone before calling it a day in the crucial context of a small window with the dot plot and FOMC press conference all jam-packed next to each other within a short period of time after the initial rate cut announcement. We thought that the extra value above 2,590 would be $10, a nice round figure. Risk managers, like us, would have known that regardless of whether the US Fed was forced into a 50 basis point cut, since they don't like to shock the markets, or whether it was an independently data-driven decision, Powell would use the FOMC press conference afterward to dampen any expectations that the next meeting would guarantee a similar rate cut. Powell did exactly that by stating that, "I do not think that anyone should look at this and say, 'Oh, this is the new pace,' hence the sharp correction off those comments." The day after the FOMC events, we saw the beginning of a move higher after the correction to close at the latest all-time high on Friday, which was 2,625. That push-up was confirmed here after the candle body close above 2,600. We have been saying all along that any strategic pullback is a great opportunity to buy and to be careful with shorts unless you know what you are doing. See you next time.